Hey everyone, Coach Investor back with another Lemonade video for you today. So we have some exciting news. Lemonade has officially announced that they're going to go into the car insurance industry. Super big move after they're announcing their life insurance product. I think this is the second biggest one. Huge market. So we're going to discuss a bit how that could work out for Lemonade. I talked about this already a couple of times on the channel. If you want to watch that, it's going to be in the top right corner, as well my interview with Daniel Schreiber, the CEO. So in this video, we're also going to look at the graph because it's been a while and earnings are coming up in about 2 weeks. So we're going to look a bit at the past earnings report and see where Lemonade could be doing better and will probably be doing better in the quarters to come. So stay tuned for all of that. If you haven't subscribed to this channel, I would really appreciate it if you hit that subscribe button. And if you like these videos, maybe leaving an early thumbs up, as it really helps me out grow the channel and get my videos out there. I would also like to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Full Offers. Through the Motley Fool's Stock Advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. So without further ado, let's dive into this. Alright, so looking at the graph real quick, we can see that this stock, since the earnings report, has gone sideways basically and on the way down, but we can see that this $80 support line has held perfectly. We'll see what happens in the coming days, but if the market reacts positively on the news of Lemonade going into the car insurance industry, we could see that support line holding pretty strong. Overall, I do think this stock will go sideways for a while, especially since we've got earnings coming up. So if you want to accumulate, if you want to sell, if you want to buy, this is usually the time to do so. Sideways action is usually the time where you can probably make your decisions better than when the stock has been going up 30% or down 30%. All right, so now let's talk about the car insurance announcement. We're going to look at a couple of tweets from Shai, Wininger, and then let's speculate on how this can be rolled out, how this will work in the future. So this morning, Shai tweeted out 6 hours to go with a Tesla and a charging percentage going up to 69%. Pretty nice there. And then he tweeted out, so we're hard to work on Lemonade's car, a new car insurance designed for safe drivers and environmentally friendly cars. Behind the scenes updates here. So you can go on the website and you land on this page right here. Not much information. You can put your email here and then they will probably send you product updates, behind the scenes info and more. All right, so now let's talk a bit about how this car insurance could be rolled out. Because we know that they rolled out already life insurance, which is an $800 billion market, which is pretty big. It's a market that is ripe for disruption. We're going to see how that results for Lemonade in the coming quarter, but I expect super positive results on that. But for car insurance, we can see already other companies doing the same: Metromile, Root, Tesla car insurance. Now, for example, Tesla car insurance, they have a big advantage because, well, they own the car, they own the software, they own the data. So pretty easy, pretty simple to analyze how you're driving. Reckless driver, not reckless driver, doesn't matter if you're old, young, a man or a woman, doesn't really matter. Especially now with the deadly car crash that has left 2 passengers dead because, well, they said they were on autopilot and the car was driving itself, which is pretty much a big lie that the media just threw out there because, I don't know, they probably don't like Tesla and they don't like Elon Musk because they're so successful and they were wrong for years. So how will Lemonade's car insurance go to work? If you have any other ideas than mine, leave it down in the comments below. So first up, I would say partnering up with other car manufacturers. Since everyone is going to electric vehicles, software in the car shouldn't be a problem. Lemonade putting Lemonade's car insurance software inside the car, that way they know if you are speeding, not speeding, driving recklessly, etc. That's one way, completely normal, not so difficult. Second, they could just be an independent insurance that people, when they buy a car, they get Lemonade insurance regardless of the software of the car or whether or not Lemonade is integrated inside the car, which blends into my third point, which is basically this pay per mile, pay per use of a car or whatever. But then again, you have this question of who should be insured, whether it's the owner, the operator, or the driver himself, when we're talking about autonomous vehicles, which we're probably going to go into the next coming years. This again is a question I'm asking you. Who should get insurance? The car, the driver, or the operator of this autonomous vehicle? Leave it down in the comments below. So overall for Lemonade, they have a couple of options. Directly go to a car manufacturer, say, look, we want to partner up with you. We have the technology on the back end. Would you like to work with us? Yes, no, yes, perfectly. Second option, go directly to the consumer, say, look, you're going to buy this car. We have the data, the technology, etc. You will pay probably less than if you go with another guy because, well, we know exactly how you drive. Doesn't matter if you're a man, woman, young, old, we will know and we will give you a fair price. Third option is when there will be autonomous vehicles. Who should be insured? Again, this is a win-win situation for Lemonade because either way, somebody will need to get insured. In some scenarios, maybe all three would get insurance. But again, Lemonade is not alone in this market. Like I said, Metromile, Root, Tesla Insurance, probably other car manufacturers are probably thinking about the same thing. But when you're first to the market, when you start collecting that data before everybody else, sometimes it's better to just partner up with the likes of Lemonade than to create your own new product. And that's where I think Lemonade has got a huge advantage, whether it's car insurance, life insurance, or all the other. They're now creating this bundling insurance, which is probably going to win over so many new customers because, well, when you buy insurance, you rather buy all of your insurance from one company than go and pick house insurance from Lemonade, car insurance from another guy, travel insurance, health insurance, life insurance from all other companies. When you can bundle that in one package, it's a win situation. Now let's quickly look at Lemonade's Q4 earnings report to see where Q1 could lead us. So as you know, customers grew 56% year over year to over 1 million customers, but quarter over quarter, that was just 6 to 7%. So not that much, but I explained this in another video why they did that exactly. Premium cover customer and in-force premiums are way more important. You can see huge growth, 87% year over year, 20% year over year for premium per customer. I expect that to grow each and every quarter as well. Gross earned premium as well has gone up 92% year over year to 50 million. Annual gross loss ratio is another important metric that a lot of people think, oh, it's still too high. Well, Lemonade is rolling out new insurance products. If they can stay at this high 60s, low 70%, it means it is working. Because when you roll out new products, usually you have a higher loss ratio because, like they say, in the first year, usually a lot of people come and say, look, this happens here, this happens there. And especially now with what happens in Texas, you can expect a higher loss ratio in Q1. They already announced that. Shouldn't be surprised if that is pretty high. All right, so to conclude, exciting times to be a Lemonade shareholder. Yes, the price of the stock might not be great because you thought this stock was going to be a $500 stock when we were at 180, but that's not how the stock market works. The company is doing pretty well, even though a lot of people are saying they're not doing pretty well. Earnings are showing the company is growing and growing fast. And with the launch of new products such as life insurance, car insurance, going into new markets, this company is just starting. If you have a long-term view, you shouldn't be worried about this short-term price action on the downtrend. You should be pretty excited that the company is growing and launching new products while the stock price isn't moving that much. And that will be it for this video. Let me know down in the comments below what you think about this announcement, what you think about Lemonade. And if you like these videos, leave it a thumbs up. If you haven't subscribed to this channel, hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye-bye.